Elon Musk just took a $140 billion hit. Governments across the globe have cracked down hard, shutting down his factories, halting production lines, and forcing the Musk empire to bleed billions as a result of these actions. Just 6 months ago, Elon was on top of the world, launching rockets, unveiling new gigafactories, and tweeting his way through billion-dollar surges. But then, the backlash began. A wave of regulatory red flags, escalating geopolitical tensions, and behind-the-scenes negotiations that led to a devastating global shutdown of key Tesla and SpaceX operations. How did it all happen so fast? Well, we'll connect the dots in this video. Who imposed the sanctions, why it's happening now, and what this could mean for the future of Musk's tech empire. Elon Musk's net worth decline. Elon Musk, the well-known entrepreneur and CEO of companies like Tesla and SpaceX, has recently faced a significant drop in his net worth. To put this into perspective, Musk's net worth was once so high that he was the richest person in the world, surpassing other billionaires like Jeff Bezos and Bernard Arnault. His wealth came from the success of his companies, especially Tesla, which produces electric cars and has become a leader in the automotive industry. Tesla's stock price soared in previous years, making Musk's fortune grow rapidly. However, the recent decline in his net worth shows how quickly things can change in the business world. The main reason for this dramatic decrease is the impact of global sanctions. These sanctions are restrictions imposed by countries to limit trade and economic activity with certain nations. In this case, the sanctions have affected Musk's factories and supply chains, causing production delays and financial losses. For instance, Tesla's factories in places like China and Germany have faced challenges due to these sanctions, leading to fewer cars being produced and sold. When a company sells fewer products, its stock price often drops, which directly affects the owner's net worth. Musk's decline in wealth is not just a personal loss, it also reflects broader trends in the economy. Many tech companies have seen their stock prices fall due to various factors, including rising interest rates and inflation. Investors are becoming more cautious, leading to a sell-off in stocks, especially in the tech sector. As a result, even though Musk's companies are still performing well in many areas, the overall market conditions have hurt his financial standing. This situation can be surprising because Musk is known for his ambitious projects and innovative ideas. For example, SpaceX has made headlines for its successful rocket launches and plans to send humans to Mars. Tesla continues to push the boundaries of electric vehicle technology, with new models and features being introduced regularly. Despite these successes, the financial markets are unpredictable, and external factors like sanctions can have a huge impact. Comparing Musk's current net worth to his peak shows just how significant this loss is. Losing $140 billion is like losing the entire fortune of many billionaires combined. For instance, it is more than the total net worth of some of the richest people in the world. This decline serves as a reminder that even the most successful individuals can face challenges that affect their wealth. In the world of business, fortunes can rise and fall based on many factors, including market conditions, global events, and company performance. Musk's story is a clear example of how quickly things can change. While he remains one of the wealthiest people globally, the recent decline in his net worth highlights the importance of adaptability and resilience in the face of challenges. As the situation continues to evolve, many are watching closely to see how Musk and his companies will respond to these difficulties. Will they find new ways to overcome the obstacles posed by sanctions? Global sanctions overview. The impact of these sanctions on Musk's businesses is significant. As factories faced shutdowns and production slowed, the financial consequences became clear. Musk's net worth dropped dramatically, losing around $140 billion as the value of his companies declined. This loss was not just about the money, it also reflected the challenges of navigating a complex global market where political decisions can have immediate and far-reaching effects. In summary, the global sanctions imposed by the European Union and other countries have had a profound impact on Elon Musk's businesses. These sanctions were primarily aimed at countries like Russia, Iran, and North Korea, and they created obstacles that affected production, supply chains, and investor confidence. As Musk's companies struggled to adapt to these challenges, the consequences were felt not just in his bank account, but also in the broader landscape of global business. Factory shutdowns impact. One of the most affected factories was the Tesla gigafactory in Shanghai, China. This massive facility was crucial for producing Tesla's electric cars, not only for the Chinese market, but also for export to other countries. With the factory now closed, production came to a halt. This meant that thousands of cars that were supposed to roll off the assembly line each week were suddenly stuck. Workers who relied on their jobs at the gigafactory faced uncertainty, and the local economy took a hit as well. Many suppliers and businesses that depended on Tesla's operations felt the impact, leading to a ripple effect throughout the region. Another significant shutdown occurred at the Tesla gigafactory in Berlin, Germany. This factory was part of Musk's plan to expand Tesla's reach in Europe, where demand for electric vehicles was growing rapidly. The closure of this facility meant that Tesla could not meet the increasing orders from European customers. As a result, potential buyers had to wait longer for their cars, which frustrated many and pushed some to consider other brands. The delay in production also affected Tesla's ability to compete in a market that was becoming more crowded with electric vehicle options. In addition to the gigafactories, Musk's battery production facilities, like the one in Nevada, were also impacted. These plants were essential for creating the batteries that powered Tesla cars and other renewable energy products. Without the ability to produce batteries, Tesla faced a bottleneck in its supply chain. This meant that even if the car factories were ready to go, they wouldn't have the batteries needed to power the vehicles. The situation was a double whammy for Tesla, as both car and battery production were stalling at the same time. The immediate effects of these factory shutdowns were felt across Musk's various ventures. Tesla's stock price began to drop as investors grew worried about the company's ability to meet its production goals. The longer the factories remained closed, the more uncertainty loomed over the company's future. Musk, who had seen his wealth soar in recent years, watched as his net worth took a significant hit, dropping by around $140 billion. This was a stark reminder of how quickly fortunes could change in the world of business. The closures also raised questions about the future of Musk's other projects, such as SpaceX and Solar City. While these companies were not directly affected by the factory shutdowns, the overall impact on Musk's finances and resources could trickle down to them. For example, if Tesla struggled to recover from the sanctions, it could limit the funds available for new projects or expansions in other areas. As the days turned into weeks, it became clear that the factory shutdowns were not just a temporary setback. They highlighted the vulnerabilities in global supply chains and the interconnectedness of the world economy. Musk, known for his resilience and ability to adapt, would need to find a way to navigate this challenging landscape and steer his companies back on course. The road ahead was uncertain, but one thing was clear: the impact of the sanctions would be felt for a long time. Financial consequences for Tesla and other ventures. In the first quarter of the year, Tesla reported a significant drop in revenue. The company usually makes billions of dollars from selling electric cars, but with factories closed, they couldn't produce enough vehicles. Reports showed that Tesla's revenue fell by nearly 30% compared to the previous year. This was a big shock for investors and fans of the company. When people buy less, the company earns less money, which can lead to a drop in stock prices. Stock prices are important because they reflect how much investors believe a company is worth. When Tesla's revenue dropped, its stock price followed suit. In just a few months, Tesla's stock lost about 40% of its value. This was a huge blow, especially for Musk, who had a significant portion of his wealth tied up in Tesla shares. At one point, he lost around $140 billion, making headlines around the world. This loss made him one of the biggest losers in terms of wealth in history. The impact of the factory shutdowns didn't just affect Tesla. Musk's other ventures, like SpaceX and Neuralink, also felt the pressure. SpaceX, which focuses on space travel and satellite technology, relies on advanced technology and materials that are often produced in the same factories. With these factories closed, SpaceX faced delays in its projects, which could lead to lost contracts and revenue. Neuralink, a company that works on brain-computer interfaces, also face challenges. The technology they develop requires a lot of research and development, which can be slowed down when factories that produce necessary components are shut down. This could mean that their projects take longer to complete, pushing back timelines and potentially losing funding or interest from investors. The global sanctions that led to these factory shutdowns were put in place for various reasons, often related to political tensions. When countries impose sanctions, they restrict trade and business operations with certain nations. This can lead to a ripple effect, impacting not just the companies directly involved, but also their suppliers and partners. For Tesla, this meant that not only were their factories affected, but so were the companies that supplied parts and materials needed for production. As the news of these financial losses spread, many investors began to worry about the future of Tesla and Musk's other companies. Some started selling their shares, which only made the stock prices drop further. This created a cycle of fear and uncertainty in the market. Investors often react quickly to news, and when they see a company struggling, they may pull their money out, leading to even more losses. Despite these challenges, Musk and his team are known for their resilience. They have faced difficulties before and have often found ways to bounce back. However, the road ahead looks tough. The combination of factory shutdowns, reduced revenue, and falling stock prices presents a significant challenge for Musk and his companies. How they navigate this situation will be crucial for their future success and for the electric vehicle market as a whole. Market and investor reactions. As the news of Elon Musk's financial losses and factory closures spread, the market reacted swiftly. Investors, worried about the future of Tesla and Musk's other ventures, began to reassess their confidence in the companies. Stock prices, which represent how much investors think a company is worth, took a significant hit. Tesla's stock, which had been a favorite among many investors, dropped sharply. In just a few months, it lost about 40% of its value, causing panic among those who had invested their money in the electric car giant. This sudden decline in stock prices sent shockwaves through the market. Investors are often quick to react, and when they saw Tesla struggling, many chose to sell their shares. This selling frenzy only made the situation worse, creating a cycle where falling stock prices led to more selling, which then caused prices to drop even further. It was a tough time for anyone who had invested in Tesla, as the value of their investments plummeted almost overnight. The impact of the factory shutdowns reached beyond just Tesla. Other companies associated with Musk, like SpaceX and Neuralink, also face challenges. SpaceX, known for its ambitious space missions, relies on advanced technology and materials that are often produced in the same factories as Tesla's vehicles. With these factories closed, SpaceX experienced delays in its projects. This could mean losing important contracts and revenue, which is a big deal for a company that aims to lead in space exploration. Neuralink, which focuses on developing brain-computer interfaces, also felt the strain. The technology they work on requires a lot of research and development. When factories that produce essential components shut down, it slows down their progress. This delay could lead to longer timelines for their projects, making it harder for them to secure funding or keep the interest of investors. Investors want to see results, and if projects are delayed, they might look elsewhere for opportunities. The global sanctions that caused these factory closures played a significant role in this situation. Sanctions are like penalties that countries impose on one another, usually due to political disagreements. They limit trade and business operations with certain nations. For Tesla and Musk's companies, this meant that not only were their factories affected, but also the suppliers that provided the parts and materials needed for production. This widespread impact created uncertainty not just for Musk's companies, but for the entire market. As investors reacted to the news, many began to question the long-term viability of Tesla and Musk's other ventures. The fear of continued losses made some investors pull out their money, further contributing to the decline in stock prices. This environment of uncertainty can be challenging for any company, especially one as high-profile as Tesla, which has been a leader in the electric vehicle market. Even with these significant challenges, Musk and his team are known for their determination and ability to overcome obstacles. They have faced tough times before and have often found ways to recover. However, the current situation is particularly daunting. The combination of factory shutdowns, reduced revenue, and falling stock prices presents a serious challenge. How Musk and his companies respond to this crisis will be critical not only for their future success, but also for the electric vehicle industry as a whole. Investors and fans alike are watching closely, hoping for signs of recovery and a return to the innovative spirit that has defined Musk's ventures. Future outlook and recovery strategies. One possible strategy is to diversify his business operations. Musk has already made a name for himself in electric vehicles and space travel, but he could explore new markets. For instance, he might invest in renewable energy projects or develop new technologies that focus on sustainability. By branching out, he can reduce the impact of sanctions on any single business area. If one sector struggles, others might thrive, helping him regain financial stability. Another approach could be to strengthen partnerships with other companies. Collaborating with businesses businesses that have a strong presence in countries not affected by sanctions could open new doors. For example, if Tesla partnered with a local manufacturer in a different country, they could continue producing electric vehicles without being hindered by the sanctions. This kind of teamwork could also lead to shared resources, knowledge, and technology, making both companies stronger. Musk might also consider focusing on innovation. He has always been a proponent of pushing boundaries, and this could be the perfect time to invest in research and development. By creating new products or improving existing ones, he could attract more customers and regain investor confidence. For example, Tesla could accelerate the development of its self-driving technology or explore new battery technologies that could make electric cars even more efficient. Additionally, enhancing customer engagement could be a key factor in recovery. Musk could use social media and other platforms to communicate directly with Tesla and SpaceX fans. By sharing updates, answering questions, and involving customers in the development process, he could build a strong community around his brands. This connection can lead to increased loyalty, which is crucial during challenging times. Financial management will also play a critical role in Musk's recovery. He might need to reassess his spending and prioritize essential projects. By cutting unnecessary costs and focusing on the most promising ventures, he can stabilize his finances. This could involve delaying certain projects or scaling back on expansion plans until the situation improves. Moreover, Musk could explore alternative funding sources. With his reputation and track record, he might find investors willing to support his vision, even in tough times. Crowdfunding, for instance, could be an option where fans and supporters contribute to specific projects they believe in. This not only raises money, but also creates a sense of ownership among customers.